Beachhead Capital Management presents Smart Money Insights, Japan and Abenomics. Where's the smart money allocating today? Many sophisticated investors are long the US dollar and short the Japanese yen, in addition to being long Japanese equities. Why is this? In many ways, Japan is still recovering from an enormous asset bubble during the 1980s. The Nikkei 225 index peaked at around 40,000 in the late 1980s before plummeting during the 1990s and reaching a low of over 80% below the peak in 2009. Japan is struggling with three major issues. First, slow economic growth has been persistent for 20 years, with an average quarterly GDP growth rate of only 0.21%. Second, Japan has very troubling demographics, a rapidly aging population. Today, 25% of Japan's population is over 65, compared with only 14% in the US and much, much lower in developing nations. Third, Japan's government debt is approaching unsustainable levels of nearly 250% of GDP, compared with less than 100% for the US. In 2012, incoming Prime Minister Shinzo Abe introduced a three-pronged Hail Mary strategy to jumpstart growth. First, aggressive quantitative easing and loose monetary policy to combat deflation. Second, higher fiscal spending to stimulate growth. And third, structural reforms to make the economy more competitive. The impact has been threefold. First, quantitative easing has resulted in declining interest rates from already low levels. Second, loose monetary policy has driven down the value of the yen, making exports cheaper. And finally, low rates plus a weaker yen have driven up equity prices by 160% since 2011. For additional information on how smart money insights can be incorporated into portfolio construction, please contact us at inquiries@beachheadcapital.com. Thank you.